Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure is unchanged. Got into Microsoft again and closed out again, even though I think that daily chart looks great. Made a few bucks in it again. But overall, I'm really frustrated today. I haven't had one of these days in a while. I guess that's a good thing. Because in some ways, these are the most frustrating days for me personally in my own trading at this point of my career. Which is where basically I am right and couldn't be more dang right on the idea and the thought process, and just don't really have the P&L to show for it, to be honest. I feel like I should have absolutely crushed it. I said in the morning meeting today that today's the day that I feel like we can look to be more aggressive. I think the SPYs could work their way to $400 today. I think that financials have the ability to outperform, and pretty much all that was right. We closed at SPY 400. We got the continuation today. The XLF was monstrously strong, really, especially off the open. And just feel like my P&L here is a massive underperformance for what I was actually looking for today. And for me, that's like the most frustrating thing. I would almost rather, psychologically, not truly, but at least psychologically, like I almost would rather be down, 5 figures today because I had ideas and all my ideas were wrong and everything just like failed out for me or whatever it was, than like make a small amount of money when I'm just like right across the board and everything I was looking for worked out the way that I wanted it to work out, from the follow through on the FANG names to the financials. It was all and at the same time I had zero expectations for growth, which was super weak today. Seriously, like psychologically, almost prefer to be down like 5 figures. Could feel better about it if I was just doing everything right, but like lost a good amount of money, versus be just right across the board and feel like I don't really have the P&L that I should have in order to show for it. So for me, these are the most frustrating types of days. But I was very much right. This opening price action was really difficult. We had the common gap to the upside. They basically filled that common gap. The SPYs actually don't do the sell-off justice. You really got to see the sell-off off the open in the IWM and the sell-off off the open in the Qs to really see this opening weakness that came in. And this was another thing that we were just chatting about here a little bit in the afternoon into the close about why. I don't really know why. We can, I guess, speculate about a lot of the 0 day to expiration option activity. That actually is a really plausible thesis. Or gap up profit taking kind of coming in on this market. Whatever it is, it's been very consistent that for like a couple weeks now. And I don't really remember ever seeing this with this level of consistency before. That we're just having these weak opens that turn into these kind of massive afternoon rallies. So the thought process was broadly right. We have a common gap to the upside. I was feeling really bullish this morning, feeling really bullish pre-market. I think I got that message across to you guys. I always do want to be a little bit cautious into gap ups because of this is a common gap. Common gaps tend to get filled. And even on really strong days where we don't fill the gap and we get this type of continuation, it's usually a little bit of a struggle off the open. It's usually a little bit of, that comment, right? It's usually a little bit of a struggle off the open. Sometimes you get rip-roaring momentum off the open, but then you really need those moving averages to catch up. More often you get, price and time correction at the beginning of the day. These moving averages catch up, and then you can get continuation. But this sell-off was brutal. And I remember, since I still have the SPYs up, communicating with you guys that the SPYs were the one index that looked healthy to me. I remember we had the Qs bear flagging, the IWM not looking good, and the SPYs were like, okay, like the sell-off here and the price correction is a little bit more aggressive than I want it to be, but 2.5 bars down, getting this tail on the third bar off the ADMA, tightening up here with this inside 5. This inside 5 is very viable here for a break to the upside. I remember wondering if this inside 5 can break to the upside and the market gets a lift, if it causes the QQQ bear flag that was ongoing at the same time to fail. And given the bigger picture of the market still being, more bullish than bearish, that kind of would be the expectation. But it's just very hard. And again, we're looking at the SPYs here, which were the most bullish index. Look at the Qs. Look at the IWM. This sell-off in the Qs here was atrocious. You have your common gap to the upside. Within 5 minutes, the market's basically going negative. And then the Qs were forming this bear flag down here. And it's really tricky. I was talking about this in yesterday's afternoon meeting. It's really tricky to have conviction on the market when when you're getting a different message from different things. Like I was just saying, SPYs here, not too bad. Not ideal, but not too bad. Sell off, pivot, consolidating, see if this inside 5 breaks up. Qs though, opposite. Awful sell off, below yesterday's low, green to red, bear flagging out here. What's going to win? Are the SPYs going to beat out the Qs and push the market higher? Or are the Qs going to beat out the SPYs and push the market lower? You can't know. You can assess probability. I would have said, and I probably did say at this time, that I still think that there's a higher probability of higher rather than lower, meaning the SPYs resolve up and they cause the Qs to resolve up out of this bearish pattern, specifically because of the big picture of the market still being intact. We're on this big picture. We are still above all of these key levels that we've talked about, where we should continue to err to the side of being long rather than being short. But it still makes it really tricky at that time of the day. And when I saw the way that the Qs sold off, when I saw the way that the IWM sold off also, the IWM had this nice big gap up. This is a leading index for us. Green to red, just momentum selling off the open to bring the index down to negative. Overall, this is probably more neutral, but with this negative Maribozu putting it in the penalty box, it's hard to have that same conviction that I had pre-market that SPY 400 was in the cards for today when I'm looking at this type of opening price action. And even though I was nibbling on some longs a little bit in certain spots, even kind of as the market was, in its low area of the day, I found it difficult to do anything aggressive without seeing this market being able to really kind of clear highs for that IWM. The 10 a.m. bar was a really important kind of wake-up candle. I remember talking about this in real time with you guys as well. We had a little bit of a volume pickup. You broke up here in the SPYs, almost immediately testing highs. Qs, good volume, breaking up out of the bear flag. Failed pattern oftentimes leads to a fast move. IWM, not bad as well. So I thought that was like a very noticeable candle. And I was like, okay, I still do have the market being guilty in our penalty box because of this opening candle, but now I've got the market being innocent because of this, but this hasn't negated this, so it's still a little bit of a mixed signal. So I felt better here, but really wanted new highs to come in to give me any sort of confirmation. And eventually we got that. The IWM was still kind of relatively weak throughout the day. It was struggling and then caught a bid in the last hour and a half to catch up a little bit. The Qs were significantly stronger once they broke that high, just really kind of being in this upside grind all afternoon, as were the SPYs. So we ended up getting our move today that we're looking for from a big picture thought process, but the more minutia of how that process actually came together was not as easy. So a little frustrating there. My favorite idea of the day today was the financials. I felt that the financials could be relatively strong. We've had a few good, daily chart callouts in the XLF here on the way up. I remember us looking at this 3250 area back in October. There had been no setup here for a while, which I had been communicating. Let's be patient. Let's be patient. Let's be patient. Finally, the setup came in that I really liked for today. You got your pivot here along where the market pivoted. That was Thursday of last week. Friday's a whatever day. And then yesterday was an inside day, but that inside day also showed relative strength to the market. This nice little green inside candle on low volume, no extension here versus our market that broke the previous day's low. Qs broke the previous day's low. IWM broke the previous day's low. So you got really good relative strength from the XLF. Not that much extension. Sector overall has been really strong. The daily charts for most of the banks that I'm looking at, I think look great. Look at the Goldman chart. even though it's still a little bit extended from the 21. Looks fantastic. I thought that the Bank of America chart looked great. The JP Morgan chart looked great. Citi, I wasn't on my radar in the same way. When you guys brought this up in the morning meeting, I thought that daily chart looked great as well. So really liked the financials. They were kind of my conviction idea for the day, and really they worked great. They worked great. I communicated but was not involved in going long Goldman versus the low of the third 5-minute bar of the day. That held all day, giving great initial follow-through. The banks did eventually weaken out a little bit, but that was a really solid trade. Citi also, held these lows really well. It's another one that you could have been long off of those lows. I thought it looked fantastic. JP Morgan, a little bit trickier with how it traded there through lows. But the one that I was involved in was Bank of America, and if you compare this chart to any of the other banks I just went through, even though I thought that this is just as good of a daily chart as any of the others, this was the most garbage one, and that's really unfortunate. It's unfortunate because it's the one that I was involved in. Not necessarily for any other real rhyme or reason. I tend to like how Bank of America trades compared to Goldman, which is just so expensive and is a little bit thinner. I like the bank structure as well, just kind of from a fundamental perspective. So Bank of America happened to be the one that I went after. Unlike some of the others, this one broke the opening low. It gave a second trade that we communicated that was pretty decent off of this low here. For myself, my original trade I was not giving to opening lows because the ADMA had not caught up. I would have raised my stop to opening lows had the ADMA caught up to that price, but I think, as you guys know, I do not like, and it's not that I never do it, but I always try to avoid having my stop be above the ADMA on the time frame that I'm kind of trading off of. So I was initially giving to just below yesterday's high. It's like a penny below. Yesterday's high is 37.52. This low right here is 37.52. So I was lucky, honestly, in some ways, even though I still lost money in the position in a small way today. I was lucky to not get stopped out on this candle. And instead, I actually added somewhere in here a little bit. But my initial price on it wasn't great. The add a little bit it just didn't do enough for me where I never was really able to get like a one-to-one off kind of my initial buy. My offer, I think, was like 37.86 or something like that, and never quite got up there to be able to give me that fill. So eventually, this thing came down, made new lows on the day. Again, if you look at most of the other banks, like Goldman, that did not make new lows in the day. It held that low that we called out. Citi did not make new lows of the day. It held that low that we called out. Bank of America was just weaker. It was the one I was involved in. So frustrating to see that I could be so right again about how relatively strong the financials were going to be off the open, and actually lose a little bit of money in it. Not only not make, but actually lose a little bit of money in it. So, is what it is. Is what it is at the end of the day. Had a couple other good trades. Still was able to make a few bucks in like Microsoft again as an example. Got some of the follow through on basically on these FANG names that I was looking for. Microsoft was my favorite FANG name. I kind of communicated that, but I was involved in Apple again today. It was still kind of holding the area that I needed it to hold. I had a little bit of Amazon in some spots. I had some Google in some spots. So I was able to make a few bucks for myself in those names. But compared to what the market did when I had really strong conviction today that we were going to get, upside follow through and that 400 was in the cards for today, and compared to the fact that, the XLF relative strength was like my biggest idea of the day, I'm just a little bit frustrated and feel like I underperformed. But it's not the first time that's ever happened. I'm sure it's not going to be the last time that ever will happen. And if anything, I should be happy, because the feeling I have right now of kind of disappointment in my performance based on what the market did is a feeling that I am familiar with from days over the course of my career, but not a feeling that I'm familiar with recently. So I guess that's a silver lining and kind of a good thing. But yeah, that's pretty much it. Market is thanks, Mark. Market's looking strong. Tomorrow is the Wednesday before Thanksgiving holiday. It could be slow, or we could get follow through. I'm kind of curious to see if we get follow through. We're not that extended. Yeah, it could be a snooze fest tomorrow, but it could also be like an upside grind. We're not that extended. We're, $4, $5 extended in the spies here, which is not, so extended that we can't give some continuation to the low 400s, or we could even have, it's reasonable to have a day that's big enough to get us to 405 and get us testing the 200 day tomorrow. Got to pay attention to that VIX. I know Pat was mentioning, and this has been a good signal in the past, that there is a little bit of a divergence again between the VVIX and the VIX. The VIX is concerning me because the VIX is approaching $20 again. I don't have a closing quote on the VIX. I'm not sure if anybody's got it. I think probably around $21. But the entire calendar year, VIX 20 has been a short signal. VIX 35 has been a buy signal very broadly for this market. But the other times, I feel like when the VIX was getting towards 20, like, back here in mid-August as an example, it was just so obvious that the market, thanks Andy, that the market was running out of steam. You're running into this 200 day, which is still declining. You had, I think, an 18% up move over the course of 2 months. The market was really getting ahead of itself. It was getting extended. This was, I remember it being very obvious, I think, for us, that this was going to be at least a short-term top and then kind of roll over. And I know that this run here off of lows is another like 11, 12%, something like that, off of lows that we've experienced, which I think is a similar percentage, albeit over a longer period of time, to the March rally. I just, and even though I've made a few bucks in this move here, I don't think I've made nearly as much as I made in the March rally or in the July-August rally, but I feel like I'm positioned for it in the same way that I was positioned for those rallies, which have been my best points of the year. So a little bit concerning because I feel like the market hasn't given a big enough of a move, in my brain at least, for the VIX to be back at 20 and for us to be concerned about a bigger picture roll back down. I do still think that there is an opportunity for some further legs. The trend is still intact. Seasonality is still in play here a little bit as we come into the end of the year. So, we'll see if we can get a little bit of a further overshoot on this market. But, yeah, the VVIX divergence and the VIX approaching 20 does begin to make me a little bit nervous. Then we might run into some struggle spots. So that's all I've got for you guys on my thought process. And what was the dollar? Dollar ended up super, down today. It should have helped, I feel like, even more. TLT had a really strong day today. I don't know. What's our ending? I didn't do that thing I usually do with our ending percentage points. SPY up 1.3%, not terrible. Q's up 1.3%, and IWM up 1%. I almost feel like it's not enough, though. This UVIXI chart these last 4 days. This UVIXI super extended to the downside. Like I don't like to trade UVIXI. It's a terrible, terrible product. But just looking at the technicals on this looks like it's set for a short-term bounce. This is giving like a day 4 to the downside today when the market just had a day 1. Very difficult to kind of figure out that balance of information right now, I think. So we'll see. Anyway, questions. Happy to answer questions. First I'm seeing is from my man Mark. Thoughts on NVIDIA? Yeah, so NVIDIA was one of the big signals. NVIDIA and AMD. I think even more AMD than NVIDIA. For the market rally. First to break opening highs in tech. Even before the 10 a.m. candle, right? The 10 a.m. candle was that like positive high volume Maribozu on the smaller time frames for the market. The 9:55 candle, though, AMD woke up even 5 minutes ahead of it. So AMD, fantastic. NVIDIA, fantastic. These got mentioned in the morning meeting, I think, yesterday or today, as like, into the equilibrium area with spots where you can start to look long again. This NVIDIA looks great. It closed really well. I don't really consider this to be a day 2. I consider this to be a day 1. Yes, yesterday's a green candle here, but it's just a super, super tight day. And even though it's a green candle, I don't think that the stock even closed in positive territory. I think the stock actually closed negative on a super tight day. But today is what I would really consider to be a day 1. I think that the chart looks fantastic. I think it's a leader. So let's see what this thing can actually do here as far as giving a day 2. And it's the same thing. Yes, it's the same thing with the market. Like I'm really curious to see if the market can give a day 2 tomorrow, continue the upside grind, or if it's just going to be a bore fest. I think we're set up for continuation tomorrow, broadly with the market. And if that happens, obviously NVIDIA should continue to be a leader, really. So NVIDIA and AMD look fantastic. I don't know if I would chase. I certainly wouldn't chase a gap up tomorrow. If we gap down, maybe it can give you an opportunity to sneak in some stock if you don't have any currently. From Ricky C. You got long Unity? Yeah, maybe it was you. I don't remember who called it out, but somebody had a fantastic call out. It's getting dark in here. Let me turn on the lights. Somebody had a fantastic call out in this Unity around the 3rd bar of the day that growth was trading like garbage, and Unity, which is a growth stock, looked great. It was holding in really well. You know, it was basically green by the end of the 3rd 5-minute bar, and even at the end of the day today, with the market up over 1%, I would imagine that most growth names, at least half the growth stocks, if you just start typing them up at random, are probably actually still negative on the day. But this Unity was going positive again by 940, closed up 4 percentage points on the day. So it's a really good recognition of relative strength. This one's been on the radar a little bit generally. Really want to see continuation through 35. But let me look at your question in more detail. So 12.15 inside 5 and up, something I generally don't like, but let's analyze it anyway. Okay. Yeah, a little bit of wake-up candle at noon, but not on confirming volume. Nothing really happening on the next candle. The next one's your inside 5. The one after that is the inside 5 to the upside. I use the outside 5 for my stop, okay? I like that here. So yeah, so I mean, you traded the candle and the pattern right for sure. The things that I would say are negatives on your trade are a couple. I don't like the time of the day at all. I especially don't like the time of the day given the stock is trading around the midpoint of its day's range. If you showed me this exact pattern, this wake-up candle at 12 o'clock, this little tail at 12:05, the inside bar at 12:10, your entry execution at 12:15, if you showed me this exact same thing, but it happening at highs in the stock, I would like that much better. Still won't like the time of the day, but I would like that much better. I get concerned because, again, like we talked about yesterday's afternoon meeting, if you trade every inside candle that comes in the market, I promise that you will be a loser in the long run. And when specifically do we want to utilize inside bars as an execution strategy? We want to utilize them as an execution strategy when we like other things. Relative strength, okay? You got relative strength. But specifically, we want to execute them when there is trend and momentum. And at this point, given the time of the day, and given that it's in like more or less the midpoint of its range, I would say that you have neither trend nor momentum here. You do have the relative strength, but that location and that time of the day makes me think that it's hard for this to be a consistently profitable trade in the long run. But you do have the market and you do have the relative strength. So I like that you're able to recognize those factors. But it's I probably would call it like a C+ trade at best. Which, you know, a C+ trade for the way that I kind of create my rating system actually is something where if you take the trade 100 times, you will be profitable at the end of 100 trades. But like, you're gonna have a lot of failures in there, and it's gonna be a real tough grind being positive at the end of 100 C+ trades. So you really got to make sure you're doing everything right. So again, market's on your side, relative strength is on your side, but time of day, location, lack of trend, lack of momentum, I struggle with that. But appreciate the question there, Ricky. From Rex, hello. Today I knew that AMD was strong, and I was being patient to wait for the ADMA to catch up on the longer time frame. Curious to know which time frame you're referencing for the longer time frame. I went long AMD at 11:45 when the 15-minute ADMA, maybe that's what you mean, at 11:45 when the 15... You say 11:45? When the 15 ADMA caught up to that pivot? Yep. At 11:15. Okay. 11:15. When the 15 ADMA, I put my stop at the low of the 5-minute candle. It turns out you got to use the 15-minute, and you still might have gotten shaken out. If you used the low of the 11:15 15-minute candle, you still would have gotten shaken out. But I really, really think that if your analysis is based off of the 15-minute chart, you should be executing with a stop loss that's based off the 15-minute chart. And that especially applies for this time of day. I really don't like that time of day. And that was with Ricky's question too. You know, from 11 to 2 is just not a time of day that I love. Turns out you got shaken out. AMD continues to go higher. A lot of the time, I don't know if I should get back into the trade or not after I get stopped out. I can answer that question. And then you're asking me about Tesla. Sure. So if you get shaken out of a trade, I do not think you should get back in unless a new setup comes in. Because otherwise, it's very easy just to start fighting stock and churning stock. So I really think, you chose a trade. You got to stop loss with the trade stopped you out. That means that your trade failed. I don't even care if it stops you out by a penny and then goes up. Your trade failed. You had an idea. You used a technical stop loss. Stop loss got triggered. Stock goes up. It goes down. It goes sideways. It doesn't matter. Your trade failed. You want to make sure, first of all, that you are using the right stop. So I think that your stop needs to be, especially at this time of the day, broadly, and especially when you are already creating an analysis off the 15-minute chart, you have to use a 15-minute chart stop loss. So I like this technical pullback here at 11:15, just about to the ADMA. It turned out to not quite be quite deep enough, but you think it's making a little doji pivot here. The stock's very strong. You go along with that low, it shakes you out. Gives you the exact same setup on the next candle, so you could have tried it again because of the same setup was still there. It's a new setup, but it's the same setup, if that makes sense. And that obviously would have worked if you went for it. But this is definitely the right idea. Relatively strong stock, looking for a technical pullback to equilibrium, looking for the pivot to come in, looking to purchase on the way up versus a stop loss. That entire thought process is the correct thought process. I just don't like using a 5-minute stop loss when your analysis is off of a 15-minute chart, especially when post 10:30 the 15-minute chart is more important than the 5-minute chart. Use a 15-minute stop loss. And then again, only re-enter the trade if you actually have a trade set up. Don't be tempted to fight stock. And then you also got long Tesla. Tesla's just such a rat. You also got long Tesla at 115 after the market broke higher. Yeah, this thing was just not participating at this time of the day, though. This was not participating at 115 with what the Qs were doing. So whereas I love your AMD analysis of AMD being a leader, I don't love your Tesla analysis because let's look at what the Qs are doing now. We had a glimmer of hope with Tesla at one point this morning. Josh was looking at a couple longs in it. Pat was looking at a couple longs in it at certain points. It looked okay here at the 9:45 time of the day to potentially break up, give an RDR off of this daily chart extension that it has. I mentioned, I think, that a snapback to 180 for Tesla after selling off from 200 down to 165 in a handful of days is a reasonable snapback on it. Even though I don't want to be long this stock, I think fundamentally this thing is worth half of where it's still trading, which still kind of scares me a little bit for the market. But I think that Elon Musk is literally taking a flamethrower, pun intended, is literally taking a flamethrower to Tesla and Twitter as a company right now. It's just a disaster what's kind of going on here. So I struggle to be able to buy it to begin with, but there was a setup here. There was a setup for this thing to be able to make it go higher and kind of catch a snapback bounce even to as high as 180. That could have been a trade. This inside 5 and up, I think, is what Josh tried and it failed. I think Pat was looking for continuation through highs. That failed. But there was a glimmer of hope still in this first 45 minutes. The stock was doing the right things, even though those couple trade ideas failed. But by 1:15, just look at the cues and look at Tesla. Like, it's so obviously relatively weak at that point that I just don't think it's really what you want to kind of go after. So I hope that helps Rex from Mark. I'm trying to use volume to help with stocks in play. Love that thought process. Do you use relative daily volume to help you with stocks that you trade? Any thoughts on using pre-market volume to help identify this? I have moving averages on my volume charts. I've never used that actually, but have not found a way to compare pre-market averages to identify elevated pre-market volume, or for that matter, elevated volume in the first hour of trading. I used to have, and I don't know why I don't have it anymore, to be honest. I just lost it somewhere in all the different computers and trading setups and everything. I used to have, and it was like one of two baskets in Lightspeed that I ever really built out that I used for myself. I built a basket in Lightspeed that showed me the volume of every stock as a percentage of the previous day's volume. I don't remember how I built that out. I'm sure somebody helped me because I'm so computer illiterate. But I used to use that, and I would really pay attention to it around 10 a.m. And I would be looking in that basket to see what stocks were trading like anything more than 50% of the previous day's volume. Sometimes you'd see them at 100% plus. But anything that by 10 a.m. has traded more than 50% of the previous day's volume, something's going on. And it's worth typing that stock up to take a look at it, because it's probably in play in some way. So I used to use that, and I liked it, and I found it beneficial, and I have no idea why I don't have it on my screens anymore. So you might want to look into that. As far as relative volume, so I don't use moving averages. I totally understand what your thought process is for pre-market. I don't have a science for that. I have kind of just like what I do, which is I just entirely eyeball it. And I don't know if that's the best way to do it or if it's the right way to do it. It's worked fine enough for me. But usually when I'm looking at a 5-minute chart, I'm looking at exactly the way my Tesla 5-minute chart is right now. It shows me today so far and all of yesterday. And that adds on a bar as the day kind of moves on. I mean, you can see, I'm sharing my screen in the morning. Usually my bottom right is a 5-minute chart. Sometimes it's a daily chart of my focus stock. You can see how my screen populates the next 5-minute bar without losing any of the previous day as my day continues. Obviously, there's a setting that somehow does that. I have no idea. But I'm just watching the relative volume on how the stock was trading versus how it was kind of trading yesterday. Like you can just see here, Tesla is trading on higher relative volume in the first 15 minutes than it was trading yesterday. That was actually another one of the things that I liked for Tesla today, for those first kind of longs that I was not involved in, that Josh and Pat were kind of talking about that eventually failed. That's how I do that. And when I'm doing the pre-market, it's basically the same thing. I'm just looking at relative volume kind of pre-market compared to what it does or what it kind of typically does. So yeah, not a scientific answer for you. It might not help you too much, but that's kind of what I've always done. Yeah, so I've seen traders in the past, and like I've seen it be really egregious, where they look at a 5-minute chart that just shows them like the last 5 bars, and I'm just like, dude, what are you doing? Like, how do you read that? You have to have some perspective with your 5-minute charts. Every once in a while, I will zoom in to just see the day if I really need to see like highs and lows minutely, but I'll just do that for a moment. And then I'm back out. It's always like this with this perspective. And then a 15-minute chart is always going to be showing me at least a handful of days back. so I can get perspective on a 15-minute chart also, just in terms of relative volume, where the stock is coming from, things like that. I need that to kind of be able to read my charts. For Ricky, I was trying to catch that opening move, which was my main trade in you. Gotcha. Good stuff. Yeah, I use a 60-minute chart for reference more than anything, and less for execution. 5 and 15 are my go-to. For whatever reason, I've never really done a 30-minute too much. I have nothing against a 30-minute chart. I do, though, on your next comment from Edward, dislike 1-minute charts. I just think that there's too much noise in 1-minute charts. I think they're too easily manipulated. So I'm really always looking at the 5, and I'm also watching the 5-minute bars as they build, as they get created before, and I'm paying attention to the clock too. So I'm watching those 5-minute charts as they build, and I can go, wow, like it's, 9:52 and 30 seconds and 2.5 minutes into the creation of this 5-minute bar, and it's already done the volume of the last 5-minute bar. Or look at how this candle's setting up. I know there's still 2 minutes left in this 5-minute bar, but maybe you can get a jump start. I'm already expecting the pivot to come in. It's building out that pivot. Maybe I just get in right now and I don't wait for the bar to close. Type of thing. From DJ, sometimes it feels like waiting for confirmation results and missing the move. Yeah, so there's a fine line. There's a fine line there, and let me read the rest of your question before I get into more details on that. If a shooting star forming into upside extension on the 5-minute chart, for example, I'm tempted to enter, but I also want closing confirmation for increased probability of success, but by the time the candle closes, it's already sold off. Is this the case where it's more appropriate to cheat confirmation, or is it generally ill-advised regardless of the setup, or do you have a rule where you only cheat on an X percentage of your position? This is a great question, and I was kind of coincidentally just jumping into that a little bit on the answer to the last question or comment, where I was describing how I'm watching how the 5-minute candle or whatever the 15-minute candle is building, and I'm watching the clock at the same time. And I know, like, this is where I'm expecting this pivot, or in your case, shooting star from your example, to come into the market. I'm 2.5 minutes into this bar. It looks like it's building out the candle that I'm already expecting to come in, and then I take the cheat on that, where I get in early. And sometimes I don't do it for the full position. Sometimes I do it for half the position or a quarter of the position. And I don't have a strict rule on if I get in the full position before the bar closes, or 25% of the position before the bar closes, and then wait for the bar close to get in the rest. I don't really have a hard, fast rule on that. Maybe I should, because there should be rules that govern every action in trading. I kind of do it more based on conviction. If I really have that strong, really strong conviction that the candle I'm going to get is going to be coming in, then I'll just take 100% as a cheat. If I don't have full, super strong conviction, then maybe they're taking 25, 50%, and then looking for the ad if the ad becomes appropriate when the candle actually closes. So that's how I do it. And just broadly, we got to be careful with, like, confirmation, that term, because for me, confirmation is the layers of probability. Sometimes I see traders confuse confirmation with the trade basically already worked. Like, I was thinking about buying this breakout at $50, and it went through $50, and now it's at $50.25. Therefore, I have confirmation that the breakout is working, so I buy. That's terrible. You're reacting to the move already occurring. That's not confirmation. What you want to do is you want to anticipate that the move is going to occur. So anticipate, don't react. Anticipate to the move occurring. Don't think that confirmation is that the move has occurred. Confirmation comes from layers of probability. Comes from multiple time frame analysis, from relative strength, from the setup that's there, from what the market's doing. That's confirmation. And that's why I was saying, like this morning, I wanted to wait for confirmation to get more aggressive with the market because of the mixed picture. Because what I wanted to wait for was not the stock market to get to $400 and then me start doing my buying when the price started at $400, to just use an extreme obvious example. What I wanted to wait for was the fact that in the beginning of the day, I didn't have that multiple time frames, not really the right term here, but like multiple time frame analysis confirmation, where the same picture is telling me the same thing on multiple time frames, except in this case it wasn't multiple time frames, it's multiple indices. Like we discussed earlier, and one of the things that I think made today difficult was that the SPYs look okay. SPYs look just fine here at 950. But the Qs were making a bear flag, and the IWM was somewhere in between, but after an atrocious negative Maribozu. So I don't have confirmation on my long bias because different indices are telling me different things. I need all the indices to be like, hey, it's go time, and then I can find my setup. And the difficulty of these opening sell-offs has been the consistency of that lack of probability confirmation from, you know, the different pictures there. And that also goes back to one of the other difficulties about this recent market that I described in yesterday's afternoon meeting, where it seems like relative strength and relative weakness is flipping like intraday a lot. Where, you know, the Qs were the worst and the IWM was in the middle, but by 2 o'clock, the Qs were at least as good as the SPYs, if not better, and the IWM had become weaker. So we're seeing a lot weaker. A lot of that intraday flipping, even like Google and Amazon yesterday afternoon was like a really weird example that we also were able to look at. So let's all remember what our definition and what our meaning of confirmation actually is. And then I hope that answers a more detailed part of your question as well. From Edward, what I like to do is watch and play names versus the indices, dollar, the VIX, the treasuries, see what has relative strength, and buy some on a pivot. Yep, 100%. 100% with you on that idea. I love it. Alright. I think I got through the questions. So unless anybody has anything else. Oh, from David. A lot of tech stocks closed the day at key levels. For example, Tesla 270. I actually don't think Tesla 170 is the level, but I understand what the point you're trying to get across. NVIDIA 160, Apple 150 is a level for sure. Microsoft 245, yeah, it's around the area that I've been looking at as a level. AMD 75, etc. Thoughts on possible bearish movement before the FOMC minutes report tomorrow? Oh yeah, actually forgot we got Fed minutes tomorrow, so appreciate you reminding me on that one, David. Yeah, we got Fed minutes tomorrow. I mean, look, we closed on highs today, and the market is overall bullish. I think that you're better off assuming upside continuation than anything else still at this point. I don't think I would try to fight this market when we just had a day one and we closed at highs and the dollar was weaker and TLT was strong, even though the VIX is approaching 20 and we have a little bit of a VVIX divergence, which could be a little bit of a warning sign. While the market's holding above all key pivot levels on its daily charts, and these stocks, with the exception of Tesla, are all holding up above key pivot points on their daily charts, I think that you're shouldn't be thinking about. I think that maybe there is a bearish movement before the Fed report tomorrow, but I think that's the lower probability situation, and I think that's harder to plan for. I think that the appropriate thought process is just to expect the short-term bullishness to continue until it proves that it doesn't. And then, yeah, I don't know. I was originally thinking about upside grind tomorrow. Maybe we don't get that with the Fed tomorrow. But I don't know how important. The Fed minutes are going to bring volatility. They always do. But I feel like the Fed minutes are stale at this point. Because the Fed meeting was before the CPI. And there's been so much Fed chatter post-CPI that's probably more updated of a thought process than what we're actually going to see from the minutes. So I don't actually think that these Fed minutes are going to be as important as they sometimes are. Curious to see if there is continuation. And what am I seeing here in the VTF? You guys are like next door neighbors and didn't realize that you guys were both here in the VTF. Am I invited to the barbecue? Walt, you guys have a mutual friend? This is too funny. And what you guys are in Michigan, is that right? Michigan is on my list. I eventually want to be able to hit all 50 states. Got this app. It's called the BEN app. It's kind of cool, BEEN. And it just can track for you, or you can kind of track like every state and every country that you've been in. And the way I do it is I only count it if I've actually spent at least a night in the state. Like not like just driving through or something like that. I won't count it, or flying over doesn't count. But I want to be able to hit all 50 states. I've done 66% of states at this point, and I'm getting to knock off a lot because I've been driving to and from Idaho a few times now that I haven't otherwise been. So at some point I gotta hit Michigan. What I'm missing is the whole South. Everywhere else, I'm not missing much. I haven't hit Michigan. I haven't hit North Dakota. But I'm missing the whole South of the United States. Georgia, Alabama, Mississippi, Texas, Arkansas. I don't have any of those knocked off. Tennessee. Anyway. Fun chatter. All right, everybody. Have a fantastic night. Let me know when the Michigan barbecue is. That's good to know. Have a great night, everybody. I'll see you all tomorrow.